Welcome to the Professionals of the Inland Empire show with your host, John Tulac.
And welcome to another episode of Professionals of the Inland Empire, which by now, if you're a regular watcher of this podcast, you know we affectionately call it PIE. And I am very happy today to have with me two experts in their respective fields. And for those of you who don't know who I am, I'm John Tulac, international business attorney located in Claremont. That's the center of my global economy. The Inland Empire is a part of my global economy, and of course, it's an essential part of yours. And so you can't do it all by yourself, which is why we have this podcast to introduce you to people who are in fields of work, who live and work in the Inland Empire, and who can help you in your business. It's also part of growing the economic development of the Inland Empire as a whole. So today, I'm really happy to have as my two guests, Marco Arcadia, who's a terrific banker, and Ed Fixen, who is the head of a business brokerage and also one of the best valuation experts I've ever run across. So gentlemen, welcome to Professionals of the Inland Empire. Everybody sit back, relax, and enjoy a slice of pie because here we go. Marco, let's start with you. You're the banker. Tell us who you are, which bank you're with, and how you got there, what you do.
Excellent. Well, thank you so much, first of all, for bringing me on this podcast. Look forward to it. And I've been in commercial banking for a little over 25 years, going on actually 28 years now. Started my banking career at Union Bank of California back in the mid 90s. And during my time at Union Bank, I was in the Marine Corps in the reserves. And, during that time, I was going to college and I fell in love with finance. And that's kind of what drew me to the banking world. And since then, I've kind of grown and through the different banking channels and finally settled in with the commercial banking and really helping a lot of my clients with these big decisions that they have to make, which is really, growing their operations, acquiring other businesses, and making sure that they're making the right decisions from a financing perspective. So I look at myself as more of an advisor than just a lender. And with that, I'm currently with a bank called Columbia Bank. I am a senior vice president here and a middle market banker. The bank is approximately 80 billion in total assets. And we are spread over the western states of the country, 350 locations currently. And obviously, we have a very, very strong footprint here in the Inland Empire, where we're extremely busy with a lot of our client base and looking to expand.
And Columbia Bank's a business-oriented bank, isn't it, Marco?
Correct. Yes, it's
So
definitely.
why is that important? Why is that a distinction that you make compared to, let's say, a U.S. Bank or a Bank of America, which are, of course, much bigger banks?
Right, absolutely. That's a great question. There's a big money service banks like you just mentioned, and then there's Columbia Bank. We are what they call a regional independent business bank out here in the Inland Empire, and our focus is strictly dealing with commercial clients. We do have some consumer clients here, but our real focus is true C&I, which is also known as commercial industrial lending. So looking at companies that range between 10 million in annual revenues all the way to $500 million in annual revenue. And we look at focusing specifically on owner-occupied commercial real estate, lines of credit, and equipment financing for these type of clients. And obviously, we're a full banking relationship type of bank, so we look at the overall banking scenario for the clients.
Okay. I know Columbia Bank is across the western states. So there's a Columbia Bank up in the Northwest that got bought out by Umpqua Bank. Is there any connection with Columbia Bank down here in Umpqua, or that's one and the same?
Exactly, yes. Umpqua is part of Columbia Bank. It's under the umbrella. And recently, Columbia also took over or acquired Pacific Premier Bank, which brings us closer to the Inland Empire. Pacific Premier has been around since the late 80s, and it's got such a strong foothold out here in the Inland Empire in Orange County that it was a perfect strategic acquisition for Columbia. And now we have the backing of Columbia Bank, which brings us up from, I think it was close to 25 billion total assets now to 70 billion. So that just gives us that capital that we needed to support and grow with some of our client base.
Yeah, I'm glad you mentioned that because banks kind of come and go. They come and they build up a reputation. And the next thing you know, they've done so well they get bought out by another bank, and sometimes the name disappears, and the whole thing kind of changes in a fairly short period of time. It can be bewildering for somebody to say, "Well, where's the continuity?" But the continuity is there. You just have to kind of follow the banker, right?
That's
More than
it.
the bank.
You're absolutely right. And that's really the focus, at least for me, is really building those relationships with the clients and having that transparent relationship where they can trust me and I can trust them just because I know their operation. This is, the type of service that we're offering our clients is white gloves, customer service, where, they can call me on my cell phone, shoot me a text, email, any which way that they need to get a hold of me so we can get on top of any issue or concern or transaction that they might be looking at here in the near future.
Yeah, and you mentioned Union Bank, which is a bank I really miss because I dealt with them a lot in the 90s because they had a real expertise in energy, particularly physical oil and gas trading. And I had a client in that space. And so I was at the bank a lot with my client in the mid 90s. It was a great relationship, really good people. But over time, that area of emphasis kind of went away.
Right.
And it never really, as far as I could tell, went anywhere else in particular. But that's another thing to kind of keep track of. I mean, you have particular strong areas at Columbia Bank where you say, yeah, these are the sectors we like, the industries we like, right? So what are those like for the bank?
Yes, yes. I would I would venture to say that it would probably be manufacturing, distribution, logistics, and just because we are in ground zero here in the Inland Empire, construction. That's just part of our DNA. We have a lot of contractors within our portfolio, but we're pretty diversified at the same time. We have service companies, we have the retail, we have law firms. We have a pretty diversified client base, which is good. It's important nowadays for banks to be somewhat diversified in their portfolios, just because of the current marketplace and the challenges that we live through. So the more diversified you are, the more diversified the bank is, the better it is to withstand some of these challenges that we constantly have to deal with.
Well, those are the key drivers out here, right? Manufacturing, distribution, logistics, and
Absolutely right.
construction. I mean, that's where the action is.
Exactly. You're absolutely right.
So you're not bored.
No, not at all. Not
That's
at
good.
all.
So let me turn my attention over to you. You never know what I'm going to say, so you got to watch it, right?
That's John for you.
And I've known you a long time. So tell us who you are, what you do, and how you do it.
Sure. Thank you, John, and thanks for having us on your podcast today. Appreciate that. So I'm Ed Fixen. I'm the founder of Business Quest Brokers. I originally started off as a consulting engineer coming out of college and spent 17 years doing that. And then in about 2000, I decided the entrepreneur in me wanted to get into owning my own business. And I went about looking for a business to buy and started working with all these different business brokers. And I probably spent about 5 years looking for the right business for me. And during that time, I realized, gosh, I just felt I could do what the people I was working with a lot better. I could communicate value better, understand the business propositions, et cetera. So um, finally, in 2006, I actually founded and started Business Quest specifically for that purpose, to become a business broker. I love that it had the financial side of it, but it also had that intangible side of negotiating, dealing with the tensions between buyers and sellers and being able to solve those problems. So 2006, I started the business. We now have two offices. We're very Southern California centric. An office in the Inland Empire in Rancho Cucamonga with three brokers out there, as well as a second office in Redondo Beach, serving more the LA County, Orange County area with three business brokers there as well. We're very focused, I would say, primarily pretty much on what Marco touched on. Uh, Manufacturing distribution is 30 to 50% of what we focus on. The rest of the pie is construction, business services, logistics, etc., and just a whole variety. One of the things I think makes a business broker different than a investment banker is we're not typically focused on an industry or two. We're fairly agnostic and have probably sold every type of business over the 20 years that we've been in business. So it's a very broad range, but we do tend to focus and have certain industries that we do multiple businesses every year. We've sold over 200 businesses in that time. I'm also a business appraiser. So in addition to just business valuation for trying to figure out their business worth, I do it for estate and gift planning, litigation, buy sales, et cetera, which just is very complementary to what I do and just makes me, in my opinion, a better business broker. Really understanding that underlying value proposition in a business, and have probably valued getting close to 500 businesses at this point in time. So yeah, that's a pretty good overview of Business Quest and myself.
Super. Well, I'm going to come back to the valuation and appraisal side of it in just a minute, but how many brokers do you have overall now working for
So
business?
all told, not including myself, I have five business brokers, and then I have another valuation analyst that supports me on the valuation practice.
Okay. So
Yeah.
I've worked with three of them,
Yes.
for sure. Maybe I'm missing somebody, but Soren Arup and Ron Varner and Dee Kana, all great guys and do terrific work. And
Yeah, you've got all the Inland Empire guys.
yeah,
Exactly.
well, what a coincidence
Shocking.
for my
Shocking.
podcast.
18.
No
Exactly.
subtlety here.
Yes.
But it does make a difference, right? Because it is also a relationship-based business. The business broker, it kind of comes into the deal, but sometimes, in fact, it's optimum. They come into the deal much earlier than when somebody wants to sell, or even if they're working with somebody who's interested in buying, because it takes some prep and planning to do it right.
Yeah, absolutely. It takes, um, there are some things we can do in a reasonably short time to get the business better prepared. There are some things, most business owners that come to us, quite honestly, they're ready, they've made that decision and they're ready to move forward. So they're usually not looking to do a 5-year exit plan, which would be great for many of those businesses. And we do refer those to, when that need does arise, to people that specialize in the exit planning and getting a little more of the long term towards helping them fix their organization or their customer base, their sales organization, whatever the case might be. But so yeah, it's relationship driven, absolutely. It's relationship driven of working with them over a period. Usually it's 6 months before you ever even get to the point to where, okay, we're going to go to market now. So there's a lot of work going into financial analysis, getting everything in place, getting a team in place. We've got, right here is, I'd say, three of the typical players on that team. We got the business attorney, we've got the banker, we got the broker, we're missing probably the CPA. And obviously there are others who play a role in that, but those tend to be the four key players in successfully helping an owner exit and retire from their business.
And I think we've known each other for like 20 years.
Yes.
Uh,
Yeah. Yeah. I've known you almost as long as probably within 6 months of starting Business Quest.
Yeah,
Wow.
Yeah.
it's right around that time, yeah.
Yes, it sure
And,
was.
and I can tell you, folks listening in, that when I think of getting business valuation, or business analysis done, Ed is my go-to guy. He's the one and only guy I'm going to call to get numbers on a business. What is this business worth? He just does terrific work. So talk a little bit about the valuation process. There are multiple ways of valuing a business, and some of them, certainly do not make the business owner very happy as to what the final number looks like compared to what's in their head. Right?
Yes. Yeah, they don't always like the answer. There's certainly a percentage of that. Fortunately, I'd say most people I work with, they really don't have, they're generally fairly open-minded. Um, they're fairly open to when I'm showing them and explaining to them and letting them see that this isn't just coming out of a black box. There is some, there's a subjective part to anything you do, and there certainly is in valuation, but there's some parts of it you can at least make an owner comfortable with. Look, I'm not making up these multiples, for example, of how we got to your valuation, right? These are coming from real data, real world stuff that shows how somebody like Marco's bank is going to they're not going to finance it unless you got a fair market value. You can't just sell it at some price that's not financed. If it can't be financed, it's not going to get sold. So at the end of the day, you're going to have to prove that. It's going to go to an underwriter at a bank. And if you can't support it with a good valuation, you've wasted 9 months, 12 months of working on selling a business.
Yeah, and I think somewhere I read, it's been a few years ago, so there may be some more techniques that I'm not aware of, but there are like 44 different ways by which you can value a business, and it's up to the person doing the work to figure out which ones are the most appropriate. And of those 44, 40 of them have gone through scrutiny at the appellate level and have been recognized by California courts as being valid ways of analyzing the value of a business. So, picking and choosing is part of the expertise, right?
It is, yeah. And some of those, it can depend on what industry you're dealing with too, because in different industries, there are some tweaks that are appropriate to what you might do for a more Main Street business, for example. I pretty much stick to when it comes to selling the business, when I'm not doing a certified appraisal for estate and gift planning. You got to follow certain IRS revenue ruling guidelines, for example, and you have to use an asset approach, which is kind of looking at a balance sheet and what's its adjusted book value. You got to look at a market-based method and what is that business worth giving its level of income for the prior years as a multiple of some income measurement, whether it's EBITDA, earnings before interest, taxes, and depreciation and amortization, or even what we use for smaller businesses called seller's discretionary earnings, which is simply EBITDA plus owner benefits added on top of it, such as the owner's compensation. And it's very common in small businesses. Might be running some personal expenses through the business. They don't have a board of directors like a publicly traded company. And so there's some things there. We have to be careful with that because of when it comes again to bank financing, they're going to rely on tax returns for valuing the business with some exceptions and allowances for recognizing compensation adjustments and certain things. And then the last one that is an asset approach, and these are the three big buckets where those 44 come out of those three buckets, if you will, and then you get into all the methods that are out there. What I found, I work in the lower middle market, small business marketplace, and what I found is people in those marketplaces, it's relatively more straightforward. If they want to know from a market basis, what are businesses like this selling for, based on the income that the business generates. So that's typically working in that arena with my business broker hat, working with business owners and businesses, of looking at really good direct data of what a machine shop, for example, sells for as a multiple of EBITDA. And that's the one I feel everybody's most intuitive with. Everybody has strong base. And when I deal with buyers, that's usually the discussion we have 9 times out of 10. If you start dealing with some private equity and maybe some more sophisticated buyers, they're going to go into the cash flow analysis and perhaps look at an income method, but usually we're talking a market-based method.
Right. And sometimes it's hard to understand. It's like a mom and pop retail shop
Yes,
that let's say makes 800,000 a year, and a machine shop making 800,000 a year, and let's say some service kind of company in cybersecurity, let's just pick something
sure.
randomly,
Yep.
making 800,000 a year. You wouldn't value those three the same way. Two are, one is retail, one is probably serving business to business as opposed to business to consumer, and the other is a service company. And so the method for valuing is not necessarily going to be one size fits all, even though the gross income is the same.
Yeah, what changes there is the industry multiples. What's kind of buried and or implicit in them is profit margins, right? Profit margins in a technology business are generally going to be substantially higher than a retail business and or a machine shop. Their growth potential, right? The growth potential for an industry is a big factor, and you have lots of scalability in technology companies. So a lot of those things are reflected in those multiples. So where you see that is even though they've got same financial results, at the end of the day, you can probably sell a technology business at a 30% higher multiple than you would, if not higher, depending on where it is and its, startup to mature phase. You're going to sell a technology business for a substantially higher valuation multiple than you will a retail business. And a machine shop would sell materially higher than a retail business, just because of the knowledge required to run that business. So that's where you tend to get the same numbers, but a very different outcome at the end of the day.
Yeah, so let me go back to Marco with that. We're going to bounce off each other here a little bit. So the days where character loans existed are kind of long gone. The regulators don't like that as the primary or sole means by which you decide to make a loan from a bank. But as my ethics teacher in law school said, character counts. It's obviously a factor. The credit worthiness of a party is going to depend a lot on the people who run the business and what their character is like. But it seems to me that not all people are created equal in the same way, even though they may have the same sterling character. It's where they're placed that matters a lot to the bank, right? In terms of you're loanable, you're not loanable based on what you're doing and how you're doing it.
Yes. So when it comes down to character, I think that's a significant part of the underwriting process for the bank. I think it's probably one of those more important factors in underwriting because we really, from a bank's perspective, we want to know the owner, the operator of the company is going to pay us back. So if there's any lawsuits, bankruptcies, or personal judgments against them personally, then we take that into account. And that's a big factor in our decision making when we're lending to an operator. Want to make sure that they have all of the background to support their operation. And I mean from an educational, from experience, from from operating the company, how long they've been operating the company, with the direction that they've been challenged with operating and moving the company in the right direction. I think that's extremely important in the way that we look at underwriting and if we're going to lend to the company.
A lot of banks, and maybe you use the term as well, use the term relationship manager. There's no business that can't do business without a good bank. And so it seems to me that it's a compelling thing to develop the relationship with your relationship manager, right? And vice versa. Develop that rapport, that knowledge of each other prior to the ask, prior to the need to ask. I need some help here with my business, right?
Right, and I agree with you. I think a lot of business owners don't see that, and that's a challenge that bankers have out in the marketplace. Is that we sometimes are not treated as trusted advisors, more like just a banker just going through the transaction, when we should be more of an advisor. Because a lot of times, the longer you spend in banking, the big part of my job is really collaborating with a lot of the trusted advisors outside of the bank. So exactly like you mentioned, CPAs, brokers, attorneys, those are the folks that we deal with quite a bit. So we get a lot of input from all of our centers of influence. And when we're talking to our clients, it's not just talking from a bank's perspective. It's looking at all different, ideas and on how to structure a transaction for the client. And that's why it's so important to deal with a relationship manager that's experienced, or a banker that's really well known and experienced within the bank, to make sure that we're structuring the correct facility, and also understand the operation of the company that we're lending to. They really have to dive in and understand all the intricacies of your operation to make sure that it's not something that we're going to hit an obstacle in a year or two, and then have to kind of look at the structure of the credit facility and say, hey, maybe that wasn't a good move. We're always looking ahead and making sure that we're making the right decision.
And the same kind of thing applies in what you're looking at, right? Because you could have two businesses that are virtually identical, but in business number one, the everything is with the guy who owns it. And if something happens to him, there's no succession, there's no there anymore. But another business, same feel, same customers and so on, it's spread out more. If the guy is incapacitated or dies, the business can continue. It's not all based on him. So the relationship is entirely different between the business and the owner, and the customers and the suppliers. And that factors into the value too, doesn't it?
Absolutely. Yes, I would say it's one of the two biggest first things we look at when valuing or working with a prospective client ready to sell is what is the owner's role? How important? What are those relationships? What is the depth of the organization of that company? Is there an organization? Can the owner go on vacation for 2 to 4 weeks and things will run relatively smoothly? That's a business that, again, we talked about risk factors all get pulled into what kind of valuation multiple, okay, you're going to get. If the owner is the business, that you're going to take a little bit of it, you're going to take a haircut on that valuation multiple. If there's an organization with a right-hand person and a manager in place that can run that business, and they've got the back office support to run the business while the owner is not there, or if something happened, they're going to get a pretty nice premium on their multiple, right? And that's one of the first things. The other one just happens to be customer concentration, but those are the two probably most common things we see in smaller to even lower middle market businesses that really affect one way or the other the value of the business. So that is without question. Now, I'll also say though, as you get into small businesses, I tell people, I get a lot of buyers going, well, the owner is the business. I go, well, kind of by definition, that's what a small business is. So I'll tell you that's why small businesses have lower valuation multiples to begin with. And it's kind of built into that fact. That's why, the multiples I use, they're coming from SBA lenders, as a matter of fact. So these are loanable businesses where the owners in small businesses, they just generally are the business, and they're going to sell for, as you said, for a lower value than a comparable business. So that's one of those things that owners typically strive for. It's very difficult on a practical level to make that happen, right? With hiring those kind of people in a business today.
Yeah, and so I can see how you work together. Marco will sometimes have to have an external valuation. I mean, certainly in real estate, going to get an appraisal is like absolutely required, right? But sometimes it's really necessary to understand what really can I do with this business, and you need that real valuation report done by an outsider rather than just look at the financials. How do you determine that, Marco?
Specific, determining the valuation.
When you need a valuation from someone who does that for a living, as opposed to simply figuring it out and applying your own criteria, by looking at the financials.
Understand. Yes, definitely when we have a partner buyout or when they're looking to, you know, well, mostly the time that we bring that in or we're looking at, an appraisal of a company is generally when they're going to be bought out. There's also, ESOP evaluations when, there's debt financing needed. Um, Even when a company's going to be sold. Well, and that was kind of my next point was going to be, we handle between 20, at regional banks, 20 to 35 clients per portfolio. At larger banks, you can have them up to, a portfolio of 150 to 300 clients in a portfolio. So at any given time, especially now, you have a large concentration of clients that are retiring or looking to, sell their companies, and that's where, unfortunately and fortunately, Ed comes in, and that's where we make the introduction to Ed, and he's been very successful, and appreciate the hard work and the honest and transparent consultative approach that Ed's had with some of my clients in the past.
And again, it comes back to the idea of knowing, liking, trusting, and referring, like we say in provisors. That's how you develop a relationship to the point where it then becomes mutually productive for one another.
Sure.
You bounce off each other, you need each other, and you have choices, but you choose to work with certain people because the reliance is there, the trust has been built, the relationship is solid, it's been established over time.
Absolutely.
It's most valuable currency, really. And you know,
Yeah.
I agree.
if you are a business person, you manage to be successful because you have something that everybody wants, but they still hate you. But there's nowhere else to go. It's like slash and burn agriculture. Sooner or later, you got to move on, right? You've
Yes.
exhausted the land where you are, and it's no way to do business. When you see something that's off, and you're in before the need to sell, it's usually something to be fixed, right? But if you have someone who's just stubborn, or they come to you, it's really late in the game. No, I just want you to sell it, and it's probably going to have unrealistic expectations about what it's worth. How do you deal with that? There's a right way and a wrong way to do everything.
Well, to me, it's bringing objective. I try to bring objective so they know this isn't just coming from, as I say, the black box, or it's just I'm making stuff up, right? I'm going to bring them actual data, SBA loans, funded businesses, et cetera, things of that nature, and say, look, this isn't. I'm just going to show you what it takes to get a business sold, to get a business financed. And we can certainly look at the financial side, but when it comes to these multiples, there's a range of fair market value that, you can't go beyond. It's just not gonna happen. So typically I try to use that approach, and look, as a broker, I don't get paid just like in real estate. I don't get paid until I sell a business. So I need to know I've got a chance of success. And I tell my clients this up front, that, if it's reasonably priced, number one reason businesses don't sell is because they're overpriced. And so number one, we need to sell it reasonably, put it at a fair market. It doesn't have to be fair, it's got to be, you go after strategic buyers, right? There's certainly a strategy there to get better than fair market value. If you can find the right strategic buyer, that's always in a seller's best interest. But you just got to be honest with yourself and not drink the Kool-Aid and understand there's a range of fair market value here in which you're going to be sold. I won't tell you I don't know the exact amount, but I can tell you plus or minus 20% where that number is going to be pretty confidently.
And with that, I'm going to have to bring it to a close. And one of the things about having a good relationship with your banker or with a trusted advisor in any category, but especially, in times of especially need, if you're going to be selling a business, is somebody who knows what that is like inside and outside. So getting to know people like Marco Arcadia and Ed Fixen is in your best interest, ladies and gentlemen. So that's it for this latest podcast episode of Professionals at Inland Empire. Thanks for listening, and so long for now. Thank you, Marco and Ed, for being my guests today.
Thank you, John.
Thanks, John.
Appreciate it.
Thanks for watching or listening to, depending on the case, the Professionals of the Inland Empire show with your host, John W. Tulac. If you have a suggestion for a guest, email him at jwtulac, that's JWTULAC, @gmail.com. jwtulac @gmail.com.